Hello everyone, welcome to the Insight Hub, your quick access to finance, accounting and business trends. In this video, I have analyzed the impact that the oil price increase, which was provoked by the Russia-Ukraine war, will have on the Nigerian economy. We already know that since this war started, oil price has skyrocketed, reaching $130 per barrel in the past week, the highest since 2014. A lot of us have been wondering, what does this actually mean for Nigeria, given that Nigeria is an oil-producing country and on average, oil contributes about 60% of the country's revenue in past years. The big question has been, is this the advent of an economic boom period for this oil-dependent country? Or is there an economic downturn on the way? The Insight Hub has detailed a few of the possible economic impacts in this video. But before we continue, please hit the like button and subscribe to the channel for more insights. You can also watch the previous video where I analyzed the root cause of the war and the general economic impacts by clicking the link on your screen. Nigeria produces about 1.3 million barrels of crude oil per day and earns over 12 trillion naira in its crude oil exports. Basically, we can say that a higher bargain price for oil directly means higher revenue and earnings for the country. But before we make that conclusion, bear in mind that there are factors that prevent the country from benefiting from the oil price hike. Do you know that Nigeria imports about 90 to 95% of refined petroleum consumed in the country? This is contrary to the expectations of an oil exporting nation. Why is this so? Nigeria, for several years, has had its 4 government-owned refineries inactive and unable to refine crude oil. This means that although we produce the oil, we must export it and then import the refined petroleum from other countries at a higher price. So when we try to net this off, the country technically spends more in the importation of refined petroleum than it earns in exporting the crude oil. In order to maintain a bearable pump price for petrol in the country, the government made itself the sole importer of petrol and bears the price burden by subsidizing the landing cost of the product through NNPC. However, with the implementation of the new Petroleum Industry Act, the subsidy program is supposed to end by June 2022, although the government is seriously contemplating retaining the subsidy after the scheduled end date. But for now, the government continues to bear the loss. Now, assuming the government retains the subsidy program amidst high crude oil and refined petroleum prices, the country's degree of fiscal deficit will increase. That means that from Nigeria's annual budget, the country will need to spend significantly higher than it earns, and this will force the government to incur additional debts. In the short run, high debts can help support the government's projects. However, they lead to higher interest rates because of the perceived credit risk attributed to the country. What happens when interest rates go up? Businesses will be unable to borrow or find affordable source of fundings, thereby limiting their investing ability. Generally, if high oil prices persist and the Nigerian government continues to bear huge losses from petroleum importation, economic growth will be significantly hindered. From another perspective, we can assume that the government succeeds in terminating the fuel subsidy program this year. This means that the consumers will bear the final burden and pay significantly higher for refined petroleum. The impact of this will be felt by both individuals and corporate organizations. Individuals will spend more on transportation and powering their residential homes. Spending more means having less savings and an implied reduction in the standard of living. For corporate organizations who rely on petrol either for their factories, transportation or other needs, operational costs will definitely increase and be passed down to customers who are already suffering the direct consequence of the high petrol price. We can call this the double effect. From both angles, individuals will face higher cost of living. When can we expect some solutions to the economic threats of high oil prices on Nigeria? The Nigerian government has been making efforts to rehabilitate its 4 refineries in Port Harcourt, Warri and Kaduna, which have a joint capacity of processing 445,000 barrels of crude oil per day. Also, a new refinery owned by the business magnate Aliko Dangote is expected to start operations in 2022. The refinery is expected to process up to 650,000 barrels of oil per day. If these measures come to fruition, Nigeria will be able to significantly reduce the value of refined petroleum imported into the country. The next discussion to face is, will crude oil continue to sustain a country like Nigeria that earns half of its revenue from oil production and exports? Many developed countries, some of which get their oil supplies from Nigeria, are actively working to achieve net zero by 2030. In simple terms, they want to create a balance between the amount of greenhouse gas emitted and the amount removed from the atmosphere. And the way of achieving this goal is by reducing the use of petroleum products and substituting it with other cleaner sources of energy. This means that the volume of oil they need from countries like Nigeria will see significant declines over the coming years. In the coming future, Nigeria will definitely not earn as much as it does from oil production, even if it increases its supply. The country urgently needs to diversify its investment to other lucrative industries to sustain its balance of payments in future. This is one of the many possible economic impacts of the Russia-Ukraine war on the Nigerian economy. To get more analysis and insights, hit the subscribe button, like the video and share your comments as well. If you missed our initial analysis of the Russian-Ukraine war and the general economic implications, click the link on your screen or go to my page to watch the video. Thank you so much for watching. Once again, this is the Insights Hub, and follow us on Instagram and Twitter at @theinsights_hub and YouTube, The Insights Hub. See you soon.